Hi everyone, this is Doug Fletcher from FutureTradingConcepts.com. This is a special high profit trade report. Okay, this report is brought to you from Future Trading Concepts, the home of the nuts and bolts futures trading commodity training course and mentoring program. This week we're going to talk about a recent trade in lean hogs. The contract you're looking at in front of you is a April lean hog contract. This contract's going back to March of last year, so it's a yearly contract we're looking at over the course of a year. Now, we are going to look at this contract because we recently had a very large head and shoulder formation with a big breakdown and a nice profit, and I'm going to share that opportunity with you. Okay, what we're looking at here is the same contract with a Keltner channel overlaid. Now, the reason for the Keltner channel overlay is the Keltner channel many times helps us identify the trend of the market. As you can see, the market was in a bullish up move. It breaks out of the channel and comes down and finds support in the channel. Here it lost, it fell through the support and continued in an uptrend. And at some point it was in a sideways pattern and then it broke down. So we're going to talk about this trend and how we profited from it. Okay, we're going to start from when we started looking at this contract last summer. The market was rising very quickly and it reached a top at the end of July right here. So we met some resistance in this 91 area of the contract. Then the contract pulled down and we found some support in the 84 area, and it came back up to the 90 area and started to find some accumulation in this area. Now, it found accumulation in this area, but now it was knocking on the resistance's door at 91. It didn't yet make a new high, but it looked like we had a actual top forming here. We could almost call it a double top. But it did make a new high. It broke out in the middle of October and made a new high in this area here. So you can see the difference. Okay. Once that new high is made, it negates this top. So the market continued higher. And as it continued higher, it looks like again it met resistance here at the 83. Okay, we continued watching the market. Sorry, I said 83, this is 93. And we watched the market, and all of a sudden we started to see a pattern form here. This is what they call a head and shoulder pattern. Okay, we did not know back in the middle of October this was going to be our first shoulder, our left shoulder, looking at the chart. And now we see a head forming in the middle of November, and our right shoulder, which was a little bit of a strong right shoulder, formed in the middle of December. So over a 3-month period, this top formed. At this point, when we saw this breakdown here, it showed a lot of weakness. So we waited a little while. So we waited a little bit, and the market, this is where it broke down on the last slide, and the market had some accumulation in this area. Consolidation in this area. We put an open order in, that's what the OO is, to sell below the neckline. And the market, as you can see, did break down, and we were filled for 5 contracts on 119 of 2013, this year, at 87,225. So we're now in the trade. As you can see, the market at that time was a bit oversold if you look at the stochastics, and it did rally back up. Now, we could have taken this opportunity here as an area of accumulation and possibly sold a few more from here, but that would have been a high risk choice. So we took the conservative route and just held our contracts. Now, these comments on the side are: this is our stop, this is our fill, this is where we got our in the market, and this is our goal. Now, again, we chose our goal based on the last summer's support area. It's somewhat long-term support, so we do expect the market to reach the 84 range. Now, this again is a mental goal, and it's subjective to getting to the 84, and then we'll make a decision to what to do from there. Now, some people might choose to just put an open order in and get what they call an MIT, market if touched, at 84, or you could hold on to the contract and wait and look for additional market movement if it does make the 84 mark. The contract does reach the 84 in the middle of February. And again, we have our 5 contracts. At this point, we could take a couple of them and have them bought back and maybe keep 2 or 3. We could get out of the market with all our contracts, or we could take a choice and sit in the market. You need to make a decision here. It is your business, and where loss could be, made in this area. So we looked at our stochastic. We said, well, the market looks pretty oversold. We're probably going to get a little bit of bounce here, but we decide to hold. So instead of folding, we're holding. So we move on, and wow, the market just breaks down in a very fast movement, and it gets down to our next level of support. Now, how do we know that this is our next level of support? We looked at our monthly contract, and we know that the market's right around the 80 range is where long-term support is. You can see the 80 range is long-term resistance, then it became long-term support. So we're comfortable in that area. Okay, now you see some numbers on the screen here. This is the profit on this particular trade. We sold 5 contracts on 119 at 87.225, and we bought the 5 contracts back on 227 of 2013 at 81,500 for a profit of 28.625 points for a dollar value of $11,450 before commissions. So that was a very nice trade, and that was based on a Head and Shoulders contract. Okay, this concludes our special high profit trade report. Head and Shoulders of the lean hogs for April of 2013. I hope everyone enjoyed this video and short discussion on the Head and Shoulders. I thought it was just an awesome thing to share with everyone. What you have in front of you there is, remember, always trade responsibly if you're a trader. Always plan your work and work your plan. So please take a moment to review this. Again, thank you for joining me with Future Trading Concepts Special High Profit Trade Report. Please leave a comment below. It'd be much appreciated. Also, see us at futuretradingconcepts.com. We have many more videos out there. We do track these trades every week for our clients. If there's anything interesting out there for you, we're glad to share it with you. We do have a nuts and bolts of futures trading, commodity futures trading course and mentoring program available to everyone, as well as a trade tracker environment in which experienced traders can go in and follow our weekly trades. We have many resources available to traders, experienced traders, and we're obviously looking for beginner traders who want to get into the markets and learn how to trade commodities. So again, thank you for joining me. Look forward to seeing you again in our next video. Bye for now.